Hi, I'm Matt Blocki with EWA. Today we are talking about 5 tax tips if you're a business owner. So as a business owner, I'm sure you're aware you pay your fair share in taxes. And as a business owner, there are ways to be as tax efficient as possible. So we're going to be talking about some common tips and tactics, and then also some things that you may have not heard about. So the first tip we have is something that's referred to as Section 179. And this has to do with your car. So as a business owner, as it relates to your normal commute, you cannot deduct mileage. But when you're going to see clients or other engagements, you can do what's called a mileage route. Based upon the IRS rates, usually between 50 to 60 cents per mile that you're able to deduct off your tax return. So for example, if it's 50 cents a mile and you drove 10,000 miles, that'd be a $5,000 tax deduction. The other way you can use a car as a tax efficiency is to utilize Section 179. And Section 179 just states that if your car weighs over 6,000 pounds, you can deduct up to the percentage that you have that car for business use. So for example, if you're able to keep the clean books and records, and the car, just to keep the math simple, was $100,000, and let's say 90% of the time you use that for business use, $90,000 goes off a tax deduction. If you're in the highest tax bracket, right now it's 37%. This would end up being a $33,300 federal tax savings if you utilize Section 179. Again, assuming the car was purchased for $100,000, has to be put in use in the calendar year for which you're taking the tax deduction. And then assuming, obviously, if the books and records approve that 90% of the car's use was for business, you could have it just as a business car. The IRS would most likely want to see that you have a separate personal car and that the two are clearly delineated. This essentially is if you have, as a business owner, if you have a high revenue year, a high profit year, high taxable income year, and you wanted to take and accelerate a tax deduction, you can do this all in 1 year. But once you've done this, you've taken mileage off the table. You cannot do this and take mileage deduction until you have disposed of this car. These are our 5 tips for tax planning. Please reach out if you have any questions.